familiar faces and some that I don't recognise. Just going to say that I am a little bit nervous. So excuse me, it's the first time I've spoken in front of people since I was 12, and it was the Ruislip and Northwood Speech and Drama Festival. So I can't remember the poem either, so I won't recite it for you. But I'm just going to get started and jump right in. But once again, thank you so much for coming. What we're all here to talk about today is the Renters' Rights Act 2025. But before I get started, for those of you that don't know me, I'm going to tell you just a very brief bit about me. My name's Abigail. I've been working here since 2002. The company was started by my dad in 91. I say I started working here. I got paid from 2002 onwards. Before that, I spent my holidays making tea, delivering leaflets for free. So better not tell the HMRC about that. Sadly, my dad passed away in 2016, so I started running the company in 2014. So here we are, what's that, 12 years later, and we're still going, so I must be doing something all right. So yeah, that's a bit about me. Largely, I've worked in lettings, hello, just take a seat, and done a bit of sales, but mainly letting, so that is where the breadth of my knowledge lays. Okay. So, we've all heard about the Renters' Rights Act. If you haven't, I'd assume you've been living under a rock for a while. It is the biggest change in legislation in the property market for rentals for 30 years. When I started in 2002, all you needed was a tenancy agreement and a gas safety, and it was fine to let your tenants move into the property. Even now, we need a whole lot more than that, and obviously the Renters' Rights Act is just going to take that to the next level. The government's talked about this, proposed it in a way to make it more affordable, more secure for tenants, safer. I think there are some aspects of the law that will make things a bit more straightforward as well, so it's not all negative. So let's focus on the positives, guys. All right. The Act was passed on the 27th of October 2025, and I assume most of you will probably know it's coming into effect on the 1st of May 2026. So we have spent quite a lot of time this year, in fact it's mainly the thing that we talk about every day, what we're doing, putting in new systems and processes to make sure that we're ready, and those of you that work with us will be ready for it as well. Right, the main bits of the Act are the big one, removal of the Section 21 notice, meaning that now when you want to regain possession of your property, you are going to have to rely on Section 8 and one of the grounds within that Act. Well, within that section. They're expanding the current grounds so that there will be more uses to give notice to tenants that there aren't currently. There'll be no more assured short hold tenancies. All tenancies from the 1st of May 2026 will be periodic. They will be periodic from day one. Rent increases will be limited to annually, although I would imagine that's not that big a deal because most of us do only put up rents once a year. Rent periods are going to be for a month or 28 days, no more quarterly periods of rent or 6 monthly, which we have done in the past. There will be no rent in advance before the commencement of the tenancy. And in fact, what we've been working on is a 3-stage process. You will still be able to take your holding deposit before the tenancy starts. And then you need to make sure that the tenancy agreement is signed by landlord and tenant before you take any further funds. So there is a specific process. Property Market recommended a 3-step process, which I'll go through in a bit more detail. There'll be an end to bidding wars, so no more tenants bidding against each other. We did have a situation or a period of time a few years ago where rents were rocketing. They're not so much now, but I'll leave that for others to talk about later. Tenants will be outbidding each other because the supply of rental properties was so short. That will no longer stand. You will have to rent the property for the advertised rent or less, no more. One that I know is concerning a few people is the right to a pet. We will cover that in a little bit more detail later. Tenants can give notice from day one, and there will be new possession grounds available through the Section 8. Right, so I'm going to go through a little bit of a roadmap, talk about where we've been, where we are now, and where we're going. So as I said, the Act came in on the 27th of October. 2 months later, they brought in greater investigatory powers for local authorities, which meant that the council could on the 27th of December, thankfully they didn't because it was a bank holiday, come knocking on our door or come knocking on landlord's door and demanding a whole series of information regarding your tenancies. Thankfully, we haven't had any visits yet, but I do think they're probably waiting for the Renters' Rights Act to kick in before they start investigating people. So, January 2026, the government published some documentation, the statutory instrument with the written statement of terms that we will need to supply to the tenants. And there are a number of other draft documents they've put on there that are all watermarked at the moment, but they will obviously have the correct documents ready for us on the 1st of May. Last Friday, the information sheet was published. They did say they'd get it out in March, and they did, true to their word, last Friday. Again, Dominic's going to cover that in a bit more detail later. And there was the commencement of new financial penalties for Category 1 hazards in the private rented sector. So they're bringing in slowly some of the things they've had available in social housing for a while, and they're bringing it all into the private rented sector. Okay, so this is basically where we are now. They have just published the information sheet, as I said, and one of the most important dates, if anyone here is thinking about serving a Section 21 notice on their tenants, the last day is 4 p.m. on Thursday, the 30th of April, but I would like to stress that if you are planning on doing that, do not leave it till the last minute. Lee will probably cover this in a bit more detail, but no doubt they will be very busy and they'll have a queue of people waiting to serve notice. So you don't want to be the last one in. And then Friday, the 1st of May, here we come, commencement date for the Renters' Rights Act. The world changes as we know it now. And the How to Rent Guide will be withdrawn. We will no longer need to issue that to new tenants moving forward. Okay, so on or before Sunday, 31st of May, as landlords, as your letting agents, you will need to have done this. You will need to have served the information sheet on your tenants, and that's all tenants listed on the tenancy. Any verbal tenancies must now be written. Probably most of you don't have verbal tenancies. If you do, come and speak to me later. And landlords of HMOs with full-time students will need to have sent a notice of their intention to rely on ground 4A. I'm not going to cover this particular section in any more detail because we don't have any student tenancies. It's not something we work with. But if you do have any questions, see me because I do know a little bit more than I'm going to go into detail on today. Okay, close of business, Friday, 31st of July. Those of you that have served Section 21 notices, this is the last day that you will be able to act on it. By this date, you need to have put in an application with the court for possession of your property. Otherwise, that notice will be null and void, and you will have to go back to serving a Section 8 with one of the new grounds or one of the existing grounds in it requesting possession of your property. Okay, and what we have to come, what we have to look forward to over the next few years. So from late 2026, the landlords database will begin its initial rollout. What we don't know yet is how that's going to pan out or where they're going to do it. Previously, when the government have rolled out new things, they've started in the Midlands area. I think Birmingham started with the rollout of some of the changes they brought out with universal credit. So maybe they'll do that, but we don't know any more yet. I will let you know as we do. 2028, they're going to launch the private rented sector's landlord ombudsman, and people will need to join that in 2028. May 2028, the government are going to publish their initial evaluation of the impact of the Renters' Rights Act. And then in May 2031, they're going to publish their second evaluation of the Renters' Rights Act at its 5-year mark. And then from 2025, again, they've not been very specific about these dates, they will be bringing in the Decent Homes Standard and AWAB's law and applying them to the private rented sector. They are currently applied to social housing, so we will have that to look forward to. And that was a whirlwind tour of what we're going to be doing. I will come back to all of those points in more detail later, but I'm very pleased to introduce Jordan. Jordan works for Mantra Mortgages, who we do a lot of mortgage business with. He's going to come up and tell you a little bit about the mortgage market. So we can just give Jordan a quick round of applause. Thank you. I'm just going to give you this mic.
Is it on? All good? Yeah?
Lenny can tell you. We can all hear you anyway.
You can all hear me. Great, great. I'm not very quiet anyway, so that's fine. Well, I was actually in Wembley on Sunday afternoon. I'm hoping this is a bit of a happier visit. So yeah, when I knew I was coming back here a few days later, I was a bit dubious. Saw the stadium loom into view as I arrived and was like, oh God. Anyway, yeah, it's a very interesting period in the mortgage market at the moment. Things were looking really good. They were pricing in 2 or 3 base rate cuts. And then we've had the events going on overseas that has turned everything 180 in terms of that. So where we were looking at rates reducing, rates coming down, we're now probably pricing in a couple of base rate increases in the coming year. But before I go into any more about the market, I'll just introduce a bit more about the company I work for, which is Mantra. I was literally just told that one of the directors that started Mantra actually worked here a while ago. As a Saturday boy many years ago, now runs the company of Mantra. So there's a bit of a link between myself and Abigail and Nimesh, who used to work here as well. I know some of you guys might know. Mantra kicked off as a commercial brokerage, so dealing with your commercial type lending. But when they were working with developers, they realized that there was going to be a need for other parts of the business which now exist. So you've got a specialist insurance business at Mantra now, which is going to be vital to landlords going forward with some of the changes that Abigail was mentioning. It's going to be a really important part of how you manage your portfolios, given the shorter term tenancy periods that we're going to be seeing. At the moment, you've got a 1-year AST, but as Abigail mentioned, they're going to be periodic tenancies now. So having some sort of backing to that is going to be important as we progress. Those products are not really prevalent at the moment, but an insurer is going to come along and perfect it at some point, and it's going to be quite important. And then they took the commercial lending. They realized everyone in the commercial sector that they worked with had a residential mortgage, had a buy-to-let mortgage or portfolio, and they started the mortgages business, which is where the part of the business that I came into exists. So looking at it from our perspective, we're always adapting to the changes. What we've seen in the last couple of weeks, because of uncertainties in the swap markets, we're seeing lenders pull in longer term products at the moment. So your 5-year fix are a bit more expensive at this moment in time. Some of the more specialist lenders have pulled out of that market, and that's because there's a lot of uncertainty right now as to how long the event that we're reacting to is going to be continuing. We saw inflation numbers come out at 3% today. That's going to increase because energy bills are going up, and that is going to impact inflation, and it's going to make a difference to what we see on the markets. But they are going up at the moment. However, there's always positives because the lenders are adaptable. So at the moment, they're offering more tracker rate products, which can help in certain circumstances, because if they have no penalties, it gives you the option to, rather than fixing at a higher interest rate for 5 years, take a more flexible deal, and then you'd be able to react once the situation's more clear than it is right now. In terms of the situations that I help with, so we deal with any kind of mortgage process that you can imagine, from your straightforward first-time buyer through to very complex property types, very complex portfolio landlord scenarios. A few of the ones we completed on in recent months were multi-property trade-in business loan, where the properties were owned by a trade-in business. One of them was quite high. One of the properties was quite high yielding. One of them was quite low yielding. We managed to do that on a multi-property loan, so tying the assets together to get the lending that was required. We've helped with multi-unit block scenarios where the works were not even completed for the conversion at the time we were working on the case. The client only had land and property income. That's another scenario that we work with quite a lot. And we've also done some limited company purchases where there's gifted equity. If someone's buying from family, buying into a business, and they've managed to gift the equity into an SPV. So that's quite niche, something else we've been able to help with. Lots of clients are incorporating at the moment, moving their portfolios into a company. You're going to need good accountants if you're going to do that. And you're going to need good conveyancers and good mortgage brokers. We do that kind of thing every day, working with landlords who are looking to go through that process as well. One of the big changes in the buy-to-let market that we're seeing is, because of these changes that are coming down the road, is corporate lets. A lot more people are reverting to those because the shorter term periodic tenancies are coming. They have a company who will let out the property on their behalf, but these are normally longer arrangements and some lenders don't like it. So it's important to speak to a broker because you need to have exit clauses in place every couple of years at least for your better price lenders to get comfortable with the application. And obviously we don't know where the market's going exactly. Lenders are adaptable, but with the Renters Act that's coming in later this year, a few things that might be affected are affordability. At the moment, lenders base their borrowing to landlords on your rental income. But again, with ASTs being replaced by shorter term tenancies, there's a bit less security around that for a lender. So we could see them starting to look at the overall financial profile of landlords when they're processing buy-to-let mortgages. They could, if they deem that the risk is higher for landlords, reduce the maximum LTVs we can, the maximum loan to value that we can obtain, which is the amount of borrowing against the property value. They could take a smaller cut of that as their maximum share at the moment. You can get to 75, 80%. If the risk is higher, you might see that come down to 70% or so. And it could affect interest rates, but obviously that's a different market and different calculations will come in. Lenders are still going to be competitive, but what I would say is it will be more important than ever to work with brokers like myself, but whoever you work with at the moment when it comes to dealing with these property assets that you've got, because the market is going to change and brokers are the ones that see that change every day and can help you react to it sooner rather than later. If you have any more questions for me, I've left some business cards by the water table out the back. I've handed a few out with the booklets you've got, so a bit of forced market in there. But if anyone wants to get in touch, just give us a shout, give us a call. We've got the different aspects of the business, the commercial sector, the insurance sector that we can support with, and then obviously the mortgage part of the brand with myself. But like I say, it's been great talking to you this evening. I'll hand back to Abigail and yeah, wish you all the best of luck adapting to the changes going forward.
Brilliant. Thank you very much, Jordan. So up next, we've got Dominic. You forgot you were next, didn't you? He's going to be comfortable lounging at the back there. I can see him leaning. Okay.
Thank you. All right. Thank you. Whew. Okay. Good evening, everybody. Thank you, Mr. Wheeler. Firstly, I'd like to say a huge thank you to everybody for attending today. It does mean a lot to us, and I hope everyone can learn from this session as well. For those of you who don't know me, my name is Dominic. I am not a hugely great public speaker, so bear with me. But what I do bring to the table is 20 years of experience as an estate agent. I started in 2006 with Abigail, and I've worked my way up to become the branch manager. So yeah, 20 years of experience, and I'm still learning. So in terms of the Renters' Rights Act, I won't just explain sort of what that's about tonight. I just want to sort of like talk to you about how it's really going to affect our Wembley landlords as well. Because in reality, this is probably the biggest change in the rental market in the last 30 years. And how you respond to the changes is right now is going to directly impact your profitability, your risk, and your long-term returns. I know some of our landlords are going to struggle with the changes, but other landlords will adapt early and they will actually come out better. As Abigail mentioned previously, the government have issued tenants, or they have issued the tenant information sheet, which summarizes what exactly is going to change for them. The tenants are going to know exactly what their rights are. They know exactly what landlords can and what they cannot do. I think in the information sheet, there's one key thing there that landlords really should take note of, and this is these rules automatically apply, which means that every single tenancy, these rules automatically apply even if your tenancy agreement says otherwise. This means you cannot rely on your old tenancy agreements. You cannot opt out. At the same time, the tenants are going to know their rights now more than ever. So if we're going to be honest, from May 26, there's going to be no fixed terms. There's going to be no Section 21 evictions. You as a landlord no longer have control when the tenancy ends. You can't regain possession of your property just because you want to. Instead, evictions must be justified. Every decision must be evidenced, and every process must be correct. And this is where many landlords will get caught out. The system is moving from landlord control to legal compliance. For example, rent increases, you will only be able to increase the rent once every year. You would now have to give 2 months notice to increase the rent as opposed to 1 month. You must make sure that your rents are of market value. Otherwise, tenants will have the opportunity to challenge your rent at the tribunal. For evictions, you have to make sure that the grounds are correct, that the notices are correct, and you get court approval. Only one of these mistakes can cause months of delays in you getting your property back, and it could also affect your rental income. Now let's bring this closer to home, because here in Wembley is a high demand rental market. There's strong tenant demand, higher rents than neighboring areas, and the regeneration is driving growth. That's the good news. But under the new system, high demand doesn't protect you from the legal risk. In fact, it increases scrutiny because tenants are more informed, rent levels are being challenged, and compliance failures are going to be more costly. Based on what we're seeing already, landlords will struggle with incorrect rent increase procedures, poorly evidenced Section 8 notices, refusing pets incorrectly, not issuing correct documentation. This will cause delays in regaining your possession. And these aren't the minor issues, they directly affect your income. But here is the opportunity. This legislation will separate professional landlords to the casual ones. Landlords who understand the rules, stay compliant, adapt to their strategy, will benefit from lower voids, better tenants, and also a more stable income. This is where a good agent comes into play, which would be us, because managing properties is no longer about just finding a tenant. It's no longer about just collecting the rent. It's about legal compliance, risk management, strategic rent setting, and proper documentation. We will help landlords stay fully compliant, structure rent increases properly, handle possession cases properly, and protect their investment. In short, we remove the risk that this new legislation creates. So I'll leave you with this. The Renters' Right Act isn't a legal change. It is a shift in how property investment works. You have two options. You navigate it alone and take on the risk, or you can work with professionals who deal with this day in, day out. Because of this new market, it is not the landlords who have the most property that wins. It is the landlord who adapts the quickest. So I'd like you to, if you'd like actually, for us to review your current tenancies, advise you on how this is going to change and affect your portfolios, or if you just need support in helping staying compliant, please feel free to reach out to me or any of the team after this session. Thank you very much. Thank you.
He was very nervous, so didn't he do well? Right, Lee's already here. I'd like to invite Lee up to the stage now. He is going to talk to you a little bit about himself, and but not too much, we're on the timer, and talk a bit about what's going on with Section 21s and evictions.
Thank you so much. Yeah, hold it, don't worry. Good evening, everyone. I am Lee Daniels. I run Help Plan Limited. We are a eviction company. Hopefully, you've not used me before, but if you have, hello. So I'm here to explain where we are now. Again, hands up if anyone's done an eviction or going through an eviction and knows about eviction. Not with a smile on your face. Okay, so is it, if you don't mind me asking, Section 8 or Section 21? If that means. So turned into Section 8? Okay, fine. So the reason I ask is because the current rules dictate that you can serve a Section 21. I'm sure we all know what that is, but if you don't, that is a 2-month notice that you can give to the tenant as long as, for no reason, and as long as the tenancy agreement is either coming to an end or has already ended. That's what they're getting rid of on ground zero date, which is the 1st of May. Thank you. I didn't know it was there. Yeah. So where we are now is prior to the 1st of May, you can still serve Section 21s. So if you need to, serve it now. Even if it ends after the 1st of May, some people are confused thinking because you have to give 2 months notice, and 2 months notice is obviously post the 1st of May, you can't serve it. You still can. But from now until the 1st of May, Section 21s can still be served. From the 1st of May, you can't serve them anymore. But any notices served up to the 1st of May can still be used at court. From the 1st of May onwards, all possession claims will be Section 8, which people will currently know are notices you serve for non-payment of rent. Moving forward, it will be the only notice you can serve. So if you want to sell, if you want to move in, you can serve a Section 8. Currently, if you just want your property back, you can do so. That's going to change from the 1st of May. So the current notice period and the notice timeframes. So any notices you've served now remain valid as long as you serve them before the 1st of May, and they're valid for 6 months. So you have to issue court proceedings on any notices you serve within 6 months of notice being served. The courts are very busy, as you can imagine. Everyone's getting their cases in now before the rules come in. I would say on average in Wembley, so which would be Willesden County Court, if you submit a case to court, you'll be lucky if you get a court order within 3 to 6 months. That's lucky. Once you get the court order, if they don't leave, you then need a bailiff to evict them. Same again. It could be another 3 to 6 months. So you could budget for potentially up to a year of non-payment of rent and your tenant remaining in your property. I can only speculate that post the 1st of May, it's going to get even worse because every case is going to need to be scrutinized at court because you need to give a reason when now you don't. So, transition period before and after. So the current state of play is, as you can see, 1st of May, between now and the 1st of May, you can serve a Section 8 and a Section 21 on the old rules. I'll elaborate what that means. Section 21 is a 2-month notice simply due to the fact you want your property back. Again, as long as the term of the tenancy has come to an end or it's within 2 months of it ending. Section 8, the most common reason one issues a Section 8 is because you're owed rent. You have to be owed at least 2 months' rent currently, and then you can give 2 weeks' notice. If I flip it now, let's say today's the 2nd of May, the old world has ended. Section 21 cannot be served anymore. You need to evict a tenant. What can you do? So a Section 8 can be served. If I go forward, I'm going to give you the grounds on the new Section 8. It'd be easier this way. So the grounds you can use on new Section 8 moving forward are, if you want to move in, but you have to prove this, remember. So if post the 1st of May, you want your property back, what do? The only way you can do so is, 1, you want to move in yourself. You need to give 4 months notice as opposed to the current 2 months notice. But you cannot do it within the first year of the tenant moving in. So the tenant moves in, circumstances dictate you need the property back because you want to move in yourself. You can't. You need to wait a year and then serve 4 months notice. So let's call it 16 months, right? And then you need to issue court proceedings. Let's call it 18 months at best. It's called it 24 months at best, sorry. So the point I'm trying to make is that if you do need to serve a notice, do it now whilst you can, because post the 1st of May, we don't know what's going to happen. So that's the first reason. You want to move in, 4 months notice. The second most common reason is you want to sell. Same thing applies. You can't serve notice for 12 months after the tenancy starts, and then it's 4 months notice. This is all post 1st of May. At the moment, you only need to give 2 months notice. Rent arrears. Has anyone ever had to serve a notice for rent arrears before? You've been unlucky. It's currently 2 months rent, 2 months of rent owing equals 2 weeks notice. After the 1st of May, they've increased it. You have to be owed at least 3 months rent, and it's 4 weeks notice. So they've nearly doubled it up in full stop. So currently you're owed 2 months, you give 2 weeks notice, you then go to court. By the time you get to court and everything's finished, you could be owed 6-7 months. On the new rules, 3 months notice, 3 months arrears, 1 month's notice, that's already 4 months gone. And then you can issue court proceedings. I think you're going to be owed double the amount of rent by the time you get possession back. And frankly, for every 10 cases we do, if we get 20% of the rent back, we've done well, because most tenants that we evict, by the time we get to the eviction, they can't afford 2 months rent, let alone 10 months rent. So they just scarper. So hence, prevention is the best cure. And if you can act early, act early. Post-notice process. So this is the process from start to finish. The easy way to explain our game, the eviction game, is there's 3 steps to an eviction. There's notice, there's court, and there's bailiff. You can't do the court without the notice. You can't do the bailiff without the court. A lot of people think they can call me up and say, can we just go straight to the bailiff? Unfortunately not. Those days have long gone. So if you need to serve notice, you need to ensure all your pre-notice documents are correct. So the hottest thing the courts look for, as well as the validity of the notice itself, which is what we do, so we make sure it's correct, is your gas. So if you have gas in the property, you have to ensure that all the gas certificates are in play prior to serving notice. That's the most common form of defense I see at the moment at my hearings. And if you cannot provide the copy of the first gas certificate, if they've been there 10 years, years 2 to 9, quite frankly, you can get away with. But years 1 and 10, being the first and the last, those gas certificates have to be provided at court, or quite frankly, the judge doesn't have to grant you possession. So just be aware that if you do want to serve notice before the new rules come in, instead of rushing to do it, check your gas certificates first. An EPC can be done late, a how to rent can be done late, But the gas certificate, you can't backdate if it wasn't done. So please ensure it was done. So these are the current grounds for Section 8, which I feel a bit redundant now. People are more interested in the new rules. But currently, like I said before, 2 months arrears, 2 weeks notice. It's the strongest route to evict someone. But if you go to court and you're owed 1.99 months, the judge doesn't have to give you possession. I often get tenants literally doing that, paying an amount, so they're £4 under 2 months arrears. The judge says, well, they might pay the rest. Let's adjourn it for 6 months. So there's nothing you can do about it. The judge has it in their discretion that if they're not 2 months in arrears at the time of the hearing, at the time of the notice, and at the time the court proceedings being issued, all three, the judge doesn't have to give you possession. But that's the risk of Section 8. Alternatively, you serve a Section 21, but that means it's a longer notice period. So on the new grounds, as I mentioned earlier, where you have to give 4 months notice after 12 months of the tenant being there, it's going to be crucial the judge is satisfied you're not simply saying you're selling the property just to get rid of them, which is the most common thing landlords are saying to me now. Well, when the new rules come in, if I'm just going to say I'm selling it on Monday, I evict them on Tuesday, and on Wednesday, the sale falls through. Unfortunately, it doesn't work like that. They're saying that post an eviction based on the sale of property and post an eviction based on you moving in, you cannot relet it for a year. So just bear in mind, if you're thinking it's fine, I'm just going to evict, saying I'm going to sell or saying I'm going to move in, and then it doesn't happen, supposedly you can't rent for another year thereof. Otherwise, you can get fined. How they're going to police that, I don't know, but those are the rules, that you have to have it empty for a year if the sale falls through. Same thing for this. And I think, again, this is predicting the future. We don't know what's going to happen, but I anticipate the courts are going to need proof and be satisfied. Again, you're not just saying you're selling or just saying you're moving in to get possession. Antisocial behavior is a ground for possession, but it's totally evidence-based. And as the top bullet point says there, it's discretionary. That means the judge doesn't have to evict them. So you can spend your time and money going to court, and at the last minute, the tenant could say, I'm so sorry, and I've had this before, this is from experience. The tenant could say, I'm so sorry, I was having a breakdown, which led to me subletting and doing drugs and getting the police called every day. It won't happen again, give me another chance. The judge gives them another chance, and you've wasted your time and money going to court. So never go to court just on this. If you have this in addition to rent, or this in addition to any other breaches, fine, but going to court by this alone is unlikely to be successful. And the main bullet points that we need to know from the Renters' Right Act that comes in on the 1st is that there's no more Section 21, so get them served now. What I haven't seen on here, and I want to make it clear, so forgive me if I missed it, about when you can issue court proceedings on notices that you serve now. So you can serve notice now up to and including the 30th of April. As Abigail said, don't call me at 3:59 on the 30th of April to serve one. So you have to give 2 clear working days for it to be deemed served. So just bear that in mind. Just give it a week at least. Don't do it the last day. But any notices served prior to the 1st of May would have to give 2 months notice. So that takes you to the beginning of July or end of June. You then have to issue court proceedings by the 31st of July. So you have another month to get your cases to court. And after that, the notice you served back in the 30th of April is dead. It was pointless serving it. So just to confirm, very simple bullet point dates: serve notice by the 1st of May, start court by the 31st of July. From the 1st of August, it doesn't exist anymore, and you have to go by the new rules. Bear in mind, if you send it to court on the 30th of July, like I said earlier, it could be 6 to 12 months before you get possession. As long as you get it to court by the 30th of July, that's fine. It doesn't matter how long it takes, the new rules won't apply to you. And it's all going to be evidence-based, so make sure you keep records of everything prior to serving notice. We are entering into the unknown, but I'm pretty sure that if the courts are tenant-friendly now, they're going to become more tenant-friendly post the rules coming in. So just keep all your records in order. Any maintenance issues, which is, again, a very common defense I see at court, make sure that they're dealt with early or at least responded to early. And if you're going to serve a notice, I would say this, but genuinely don't do it DIY, because if you make a mistake, by the time you rectify it, it could be too late. So come to someone like me or give us a call. And like I said, funny enough, I didn't know that was going to come up. Preparation is the key. So make sure that prior to serving notice, everything is in order. Thank you very much.
Right, now I'd like to welcome Jessica to the stage. Jessica, just for transparency, Jessica is my financial advisor, and she, at the last minute, called her a few days ago, volunteered to come and speak and just tell you a little bit about what's going on in the financial markets.
Hi, thanks for having me here. Can you hear that okay?
Yeah, you can clip it to yourself as well.
Oh, I'll just hold it. I'm not gonna. And which is it? Just the arrow button? Oh, that one. Okay, fine. All right. So I'm an independent financial advisor. I'm not going to tell you all about our firm because I'm sure you know what financial advisors do. If you don't, you can come and speak to me afterwards. But really, today Abigail's asked me just to speak about how you hold your property. So it's the structure, whether you hold it personally or whether you hold it in a corporate. And I'm also very briefly going to touch on succession planning. So how would you pass your property portfolios on to the next generation? So I'm just interested, how many of you have properties that you hold personally? How many in limited companies? And how many both? Yeah. Okay, fine. So you're going to have some experience. So I'm glad to get my heavily airbrushed picture off the screen. So property and IHT. So I think you probably all know the exemptions for inheritance tax planning. So every UK resident, you can have an estate up to 325,000 before you'll pay any inheritance tax. There's also an additional band called the residence nil rate band, and that's if you own your own property, so your principal primary residence, your estate is 2 million or less, and you're going to pass your main residence on to your direct descendants. It's very important. So you could have estates worth up to 500,000 where there's no inheritance tax to pay. So that's very important, just to sort of lay the groundwork. And the residence nil rate band, you really must seek advice on it, because there's lots of things that you can put into your wills, which I won't go into, that can disqualify you from having that. Okay, so with property, you can hold them obviously personally or in corporates. When you're thinking about estate planning or passing it on to the next generation, there's two ways of minimizing that, your inheritance tax liability. The first one is to create a debt, so you'd speak to Jordan there, or gift. Okay, so really the most simplest way to have a property is to own it personally. But as we heard, I can't remember your name, we've just heard the compliance in property is getting more and more onersome. They're making it more and more difficult from a tax point of view. So mortgage interest relief is limited just to basic rate tax band. And then we've got the lovely making tax digital for any rental portfolios over £50,000. And I actually don't think that's profit. I think that's turnover, where you're going to have to report quarterly. So there's lots of things that are coming in for people who own their properties or a property portfolio personally. So why would you have a limited company? I'm sure a lot of you already know this. You can shelter the rent into a corporate tax paying vehicle. So essentially you will be paying 25% now if you don't need to draw the money out. So it's great for people who don't need to access all of their income. Obviously, if you draw it out, you've got to pay income tax. But also, a very key thing, if you do have debt, the mortgage interest is allowable against corporation tax. So there's some key benefits to holding property in a company. But so really, a lot of people, when you're buying your new properties, you should really explore holding it in a limited company. Okay. But what about if you have an existing portfolio of properties? And this is where I think a lot of us find ourselves in that position. Has any of you looked at transferring properties? Yeah. So we've spoken about it, haven't we? Yeah. It can be cumbersome and very expensive if you've got existing property that you want to move into a limited company structure. Okay. So if the most normal way to do it, and what I find a lot of my clients are doing, is they're selling their properties that are owned personally. They're rebuying in limited companies and they're just paying the capital gains tax. Because if you transfer, you are also going to have to pay stamp duty land tax, which can be very, very high. There is one thing that you could qualify for if you own a considerable number of properties and you can prove that it's your main business, is you can qualify for partnership exemptions. So I have had quite a few clients who have actually gone through this process. And what that means is they've actually proven that it's a business. They've gone into a partnership and then they've incorporated. And in that situation, you can avoid capital gains tax, but you have to seek advice. Tax advice is crucial. You have to keep records, and it's quite difficult to prove. But there are some set rules. So if anyone is interested in talking about that, I can talk to you afterwards. But really, why would you go through that whole rigmarole of trying to prove you're a partnership and then incorporating? It's really for succession planning. Because if you want to pass your portfolios and you hold them personally onto the next generation, you're either going to have to transfer the ownership, which will be capital gains tax, stamp duty land tax, or if you have been able to hold them in a company or qualified for this partnership exemption, it's much easier to transfer shares. And with shares comes control. So you can have different classes of shares in a limited company. You can have the control shares, you can have A shares, they will have the voting rights. You can then control whether dividends can be given out, who has the growth shares. So there's a huge amount of flexibility. So it's very short. I'm nearly finished. So property and IHT. So the rule of thumb, you consider a limited company if, first of all, you're buying new properties. You're someone who wants to have long-term wealth transfer. So you're going to hold your properties for a long time. You want to pass them on to the next generation. Another key is if you've got higher profits than you need to draw out, so you can shelter the income inside and just pay 25% tax. There's all the other things where if you've got people who have their personal allowances, they can take a salary of 10K, all the normal things you would do with a limited company with the advice of an accountant. If your borrowings are significant, so obviously you can offset the interest. And if you hold numerous properties, it just lends itself much better. But I've just put a warning. You must seek advice on all those other things. So Abigail also asked me, because I'm a financial advisor, just to quickly talk about markets. I'll be very, very brief. I'm not talking about property. I'm talking about investment markets. So if any of you have pensions, ISAs, stocks and shares, there is something going on at the moment. We've got a second war. And as has already been mentioned, it's playing havoc with the mortgages and interest rates. And at the moment, we are seeing a lot of volatility in stock markets. So essentially, it's all about oil. It's all about inflation. But at the moment, what I just want to point out is that stock markets are still higher than they were 12 months ago. And that's not from the low point when Donald did his last stunt, which was the tariffs in March. That's from they're still higher. So they've been very resilient. But really, what we're all looking about is rising oil prices. Okay, so if oil prices rise, the cost to transport goods, everything else is going to get more expensive. So that's our old enemy, inflation. So if inflation goes up, it's going to be harder for companies to make profit. So I think the key here is just ignore the noise. Don't make rash decisions. And it's the same with your properties. Don't make rash decisions just because of the things that are coming in. We need to see what happens. We need to see how long oil supply is constrained, and obviously just see what the rest of the world does. I've got a chart which is a bit mind-boggling, but it really does, and I show this to all my clients that worry about what's going on in the world, because I think over the past, since COVID, we've had shock after shock after shock. Inflation, all being in lockdown, we've got 2 wars going on. And this goes right back to 1925, if you can see right down there. And this is right up to today. You've got all the governments that have been in power. And all these little dots here are all the shocks. You've got, the Twin Towers, etc. And what will seem like a massive dip is actually tiny when you actually look at long-term investing. And what this is just showing you is stock markets go up over the long term. Okay, so we don't buy and sell, we don't worry, we just have diversified portfolios, and that's your key. So if any of you are a little bit worried at the moment about your pensions, etc., we sit, we wait, and as long as you're having good advice, it's diversified and reviewed regularly, you're going to be okay. So that's it, I finished.
Thank you, Jessica. Okay, and that passes us nicely on to Priyan, who's going to come up and speak to us a little bit about what's coming for the accountants moving forward.
Hi everyone, you can probably see from the picture before, I'm not actually Priyan. My name's Amit, I'm here representing Brampton Accounting. Priyan is here, he's the partner of Brampton. He was just too chicken to come up here. So I've actually only seen this deck today, so there's quite a few slides. I'll do my best to get through them and not bore you. This one here, yeah? Yes, so I think Jessica just mentioned there's something called Making Tax Digital coming in, starting in 26, 27. I'm just going to give you a little brief overview of what it is. So at the moment, I'm assuming most of you guys just file one tax return every year to declare your income and pay your tax. That is all changing. HMRC are making you sign up to a digital platform online and do 4 returns a year, and then a final one at the end of the year, which I'll show you through, which I'll take you through. So essentially, who does it apply to? So for those of you in the 24-25 tax year that earned 50K or more, whether you're landlords or self-employed or both, your turnover is 50K, you should be signing up for MTD for the new tax year starting in 26-27. So essentially within the next 10 days. If you haven't done so, you need to do so quickly. You can speak to Priyan or I about that. We can help you out. For those of you earned over 30, it will be starting the year after, so 27-28. And I believe it's now going to be, if you're earning over 20, it will be the year after that, 28-29. So I'm guessing some of you will fall into all 3 of those categories. Why you need to sign up? Well, because you have to. The government are making you. If you don't, you'll get penalties. There are benefits. Obviously, you'll get more accurate reporting, real-time tax visibility. So a lot of you probably find out your tax at the end of the year once you've done your tax return and you're hit with a big fat bill. This way, hopefully, you'll keep on top of what's owed to the government. How to sign up? Obviously, you can speak to an accountant like us, but you need to basically go online to the government website, create a gateway, and then it's a simple just Google sign up for MTD, and then you just walk through the steps on the website. You need to sign up to, like I said, an online accounting software. So there's loads out there. We recommend Xero because that's who we use. That's who we work well with. But there's QuickBooks, Free Agents, Sage, etc. So essentially, what needs to happen is there's two options. So you get this online software, which you're paying probably like £5 to £7 a month, and you can either just link your bank account to the software, and then you or your accountant will just do the bookkeeping for all your transactions and then submit that off to HMRC every 3 months. If you don't want to connect your bank, which is not recommended, but you can get away with it, you can just import all your invoices that all your expenses that you've got, and all your income that you've received, and you can submit it that way as well. We recommend, like I say, through a bank account because it's cleaner. We also would say, I'm guessing some of you have just one current account, or you might not have a business account. If that's the case, we strongly recommend you open up a second current account now and use it like a business account. Because otherwise you or your bookkeeper is going to have to filter through when you're doing your bookkeeping. You're going to see all your personal expenses in there and all your business expenses, and you're going to have to try and figure out which kind of expenses you need to put through and which ones you don't need to put through. So it's better to just separate it. It makes our life easier as well as an accountant, having to filter through all the transactions. So about how it has to happen, like I say, you need to do 4 quarterly updates a year, and then on your final declaration will be all of the information that you've already done before, but it will also show you your tax towards the your tax that you need to pay. All your income and expenses. For you guys specifically, not a lot has changed in terms of the kind of expenses and income that you put through. It's just it needs to be done every quarter rather than once a year now. So you can see, I'm guessing these are the kind of expenses you put through. Your mortgage interest, your fees, your repairs and maintenance, all your income that you earn. Obviously, like it says there, if you own multiple properties, all of them must be included. Income and expenses can be reported at portfolio level, or property, depending on your software. If you've got furnished holiday lets, I would recommend speaking to an accountant because things change a bit when you've got that. Some of you may also be sole traders as well. So the same thing applies as it is right now. So declare all your income and all your expenses. And most importantly, if you run more than one self-employed trade or business, each must be reported separately under MTD. But your software will handle all of that kind of stuff anyway, so you don't need to worry. This is just a kind of rehashing what I said earlier. April 26, like I said, over 50K. April 27, over 30K. And like I said, I think that is now changed to over 20K in 2028. These are your quarters. So 6th of April to 5th of July. So basically you get your first quarter and then you get a month and 2 days before you have to submit. And then the same again for the next quarter, etc. In the first year, they're going to be a bit lenient on you in terms of penalties. So if you don't file your tax returns on time, they will not award you penalty points. But you will see that they will charge you late payment interest in the first year. They don't care. So let's say your first quarter finishes and you've got a month and 2 days to file it. If you don't file it for not filing it, they won't give you a penalty, HMRC. But if you don't pay your tax, they will give you a penalty. So it is important, if you are MTD compliant and you need to sign up, essentially you need to make sure you hit your deadlines. Otherwise, you will get penalties from HMRC, and they're not shy in handing them out, and they're not shy with letting you get away with it. So I recommend signing up. Again, this is just kind of rehashing what you need to do. So on the final declaration will be all your information that you've got for the whole year. This is where you'll find out your accurate tax liability. Like I say, you'll keep a record of it throughout the year, but this will give you your final amount that you need to pay to HMRC. And just a few takeaways from everything I've just said. Make sure, like I just said, make sure you hit your deadlines, otherwise you will get penalties. Make sure you sign up to an online software. Like I said, we recommend Xero. Consider working with an accountant. With Brampton Accounting, more than welcome to speak to us. I believe Priyan has left some business cards at the back, but if he hasn't, he will do. And yeah, just keep an eye out on it from day one. Don't leave it to the end of the quarter or the end of the year. I'm guessing loads of you guys kind of leave your tax returns to the last possible moment. We know that firsthand because we get about 100 in January and about 5 before that. So do your best to try and keep on top of it as you're going along, or keep your accountant on top of it as you go along. Yeah, and that's it. Yeah.
Thank you very much. Yep, note to self. Try not to be late this year. Okay. Oh, late? Just need somebody else to make it. So I need some, at my age, I need some tech help here. There we go. Cool. Right, I'd like to welcome Hassan to the stage now. He's going to give you a bit of a roundup on the sales market.
So, right, good evening, everyone. So, nice to see some familiar faces here. My name is Hassan, for those who don't know me. I've been with the company for 16, coming up to 17 years now, so long time. I just wanted to remind everyone, know we do have a sales department as well. I know we're talking about lettings and so on, but yeah, we have a sales department. So yeah, hello from us as well. Just wanted to give a quick rundown on the sales market, what's currently happening in Wembley. I know a lot of you may or may not be from Wembley, but I'll just sort of run down just a few sort of figures. So starting with current prices, on average, flats are selling for anything from 340 up to 350. And then we've got houses which are approximately 600,000. Of course, the larger family homes, particularly in the more desirable locations, they do go for a lot more, up to 900,000, up to $1 million on Salmon Street and those bigger roads. When you look at Wembley as a whole, property prices do still remain 30% more affordable compared to the wider London average. This is one of the key reasons as to why buyers are still attracted to live and invest in Wembley. In terms of property transactions and timescales, where we used to tell people it's taking 14 to sort of 16 weeks, it's taking a lot longer now. It's taking up to 18 weeks. So we are letting buyers and sellers aware that property sales are taking a lot longer than they used to. Looking at market trends, property prices in Wembley have shown steady and modest growth over the past 5 years. Demand continues to be supported by the ongoing shortage of houses. And then obviously one of the key drivers of buyers choosing in Wembley is of course the excellent transport links into central London. Also being located in sort of just outer London, greater London, we class Wembley as, also means properties are often they have more space compared to similar price sort of closer to central London. Another major factor contributing to Wembley's popularity is the ongoing regeneration in Wembley Park. Specifically, obviously, I'm sure you've seen all the new builds being built there. What's happened? Oh. So yeah, Wembley Parks have quite a significant investment in modern apartment buildings, a lot of public spaces, amenities, and so on. Rental demand has always been strong in Wembley ever since I can remember. I've been here for a long time, and there's never been a time when rental demand hasn't been high. Particularly Wembley Central, obviously you've got Ealing Road, lots of places of worship, shops, a lot of things for local people to do. And then London Designer Outlet, you got Box Park, bars, restaurants. There's even a theatre in Wembley Park. I don't know if many people know that or not. More for the younger crowd, I suppose. So who's buying in Wembley? We are continuing to see a very broad mix of purchases. Many are families who are upsizing, moving from flats to larger houses. and we're seeing a strong number of first-time buyers registered recently. So there is still a lot of first-time buyers out there. In addition, there remains a consistent level of interest from buy-to-let investors, landlords like yourselves, who are looking to expand their portfolios. So as an overall, we feel that Wembley property market remains stable, attractive, and full of opportunity for a wide range of buyers. While sales timelines may currently be slightly longer than in previous years, the underlying demand for property in Wembley remains strong. With continued investment in the area and proving confidence in the wider market, we remain optimistic about the outlook for the rest of the year. If you are thinking of buying, selling, or you just simply want values and want to know what your property is worth, speak to anybody in our sales team. We'll be happy to help. And yeah, just thank you so much for your time. It's good to see a lot of familiar faces as well. So yeah, that's it. Any questions, feel free to ask. Thank you.
Right, I'm back, which means now is the time to get down to the nitty gritty. So we're going to go back to the Renters' Rights Act after we had all that nice information about mortgages and finance and the war, and look at something more joyful. So we've spoken already about no more fixed tenancies. All tenancies will be periodic from day one. Fixed terms entered into before commencement will become periodic automatically. They're now going to be called APTs rather than ASTs. A bit more like the old style of tenancies we had before they invented ASTs. So we're actually going back in time a bit to the assured tenancy model, but we've just given it a new name. Regardless of the number of months that's left on the original fixed term, it's all going to be periodic from now on. Okay. Now, I did touch on this earlier, prohibited terms in tenancy agreements. This is something we need to be really careful of, because moving forward, as we said before, compliance is going to be key, and making sure you're doing everything in the right way and not in the wrong way. So breach of legislation now to have prohibited terms or clauses, spelling mistake there, in your tenancy agreements. Even if you have no intention to use or enforce them, just don't put them in, because they can invalidate other parts of your agreement and the courts will not look kindly on you. We really recommend that if you're doing your own tenancies, you do not use your existing AST agreement and adapt it. We're investing in new contracts coming from Property Mark, and we're actually got two different ones coming in from Property Mark and another legal advisor, to make sure we get to choose the best agreements for our clients. But obviously they will both be compliant because they've both been written by lawyers. And yes, if you leave any of those prohibited clauses in, that's a difficult word to say, isn't it? You could be at risk of penalties. And as we know, the penalties are increasing and local authorities are not shy in dishing them out. So yeah, key takeaway, important to invest in up-to-date tenancy agreements to prevent any risk of penalties, or just get us to do it for you. Right, payment of rent. So I did mention earlier about a new 3-step process that we're going to be using. I don't know how many of you know this, but when a tenant reserves a property effectively, they pay a holding deposit, which is 1 week's worth of rent. We can take that, we can hold it for a set time, and there's lots of different clauses around that I won't go into. But tenants then go through referencing, and once everything's passed and everybody's happy, we enter into the tenancy agreement. So at that point, you need to send out the agreement, and it needs to be signed by all parties and executed. And at that point, you can actually request the balance of the deposit to be paid. So this is this is step 2 of the process that Property Mark's recommending. And then you cannot request the tenants to pay the rent until the day the tenancy is due to start. So that's the 3rd request for payment that you can make. So your 3rd step in the process. Rent's only payable monthly or 28 days. Quarterly or 6 monthly rental periods will be banned. Existing tenancy clauses will be invalid, and rent in advance of more than 1 month will be banned. There's an important nuance here that I heard on a webinar the other day, and it is that you cannot ask for rent in advance, but the tenant can offer it. But as with all things new, we will have to wait and see how that plays out, and I don't suggest any of us are the guinea pigs for that. We will wait for the case law. As I said, first month's rent cannot be taken until the tenancy's been signed, like it says here, by the landlord, by everybody, and executed. although a lot of people have talked about this, it's not that dissimilar to what we have at the moment. The Tenant Fees Act brought in the fact that you could not request further payments from the tenants until all the agreements have been signed and executed. So it's only a slight extension on that. Okay, rent increases. Probably one of the key parts of this, and I think it's going to be very important moving forward that you all have a really specific set process for it. Those of you that are going to be getting us to do it, don't worry, we've already thought about the process and put it together. So Section 13 notices, they've existed for a very long time. They are currently 1 month. And as I said before, we do use them at the moment, but not as our go-to. It's easier, obviously, to enter into a new agreement with the tenants, which we won't be able to do anymore. So from the 1st of May, your notice period of the Section 13 will be 2 months. The new forms will hopefully be ready on the 1st of May for us to use. We can now only do it once a year. As I said before, most people were only doing it once a year. So I think let's not get too het up on some of the red herrings they're throwing in there and just think business as usual. Your tenancy agreements won't have any rent increase clauses in them any longer. So, previously our tenancy agreements said that rent would be reviewed annually and largely it be increased in line with inflation. That now no longer exists, or it won't exist. And increases are limited to market rent. Again, I think this is another one of those sort of inflammatory things that they've put in, because actually not many of us are increasing rents more than market rent. And in fact, most landlords who value long-term tenants are keeping their rents slightly below market rent because they know the cost of finding a new tenant is often greater with void periods and higher fees. It's much better to keep the devil you know than the devil you don't as well. Okay, tenants will be able to challenge rent increases at tribunal, which they can do at the moment. And in fact, I have actually been to 2 rent tribunals, so I have a little experience, and it is, for those of you that have ever been to court for rent arrears or eviction proceedings, it's nowhere near as painful as that, and it's a much more comfortable environment. In fact, they're probably going to be doing them online now anyway, because of the amount that they're going to have to do, which will be far increased from what they're doing at the moment, I imagine. But it's quite an informal environment, but you need to go prepared, as with anything else. A bit like Lee was saying earlier, compliance is key, and in this situation, evidence will be key. So you will need to have plenty of evidence about what constitutes a market rent, how you came to the figure that you're going to be proposing to the tenant. We created a whole new report that's going to look at market data, both rentals and sales. So it will be sort of more of an annual property evaluation, but it will give you the evidence that you need for the market rent that you're going to be proposing, or even the rent increase if it is slightly below market rent. I can go into more detail later with those of you that are our clients about how we're going to be running those rent reviews moving forward and the timeframes that we're going to be doing them in. So as I said, tenants can challenge the rent increase at a tribunal. They can actually challenge it from day one when they move in. And some of the key bits about this is that currently, when they challenge a rent increase, the rent that they challenge, the rent is set from the minute you serve the notice. When they challenge it, the tribunal will then review the rent and make a decision, and then from that date forward, they will have to pay the new rent. And rent can be backdated at the moment. So if the tenant refuses to pay it, the court will say, the tribunal will say, no, this is a fair rent. You have to pay it, and you have to pay the back rent. But moving forward, that won't happen. They will say, okay, we think the rent's fair, but you can't backdate it when the rent increase went out. You can only claim it from the date we've set it moving forward. So actually, what's really key here is prior negotiation with your tenant to try and get an agreement before you serve the Section 13 notice. Not that that agreement is going to be cast iron. You won't be able to rely on it in court, but I think if you've got the evidence because you've been chatting with them and negotiating in writing, it's going to put you in good stead when you get to the tribunal and say, well, actually, we did speak about this before, and we only served the notice on the basis of what we had agreed with the tenant. It won't look good on them if the judge then comes back and says, but you've agreed to it, and now you're going back on it just because you can. There is also talk that they're going to make it a chargeable service for the tenants, not hugely prohibitive charges, but something, so that will potentially decrease the amount of people that do want to make challenges. Okay, the fun one, letting with a pet. I'm not a pet person, so this is not my favourite bit, but I know plenty of people love their animals, and rightly so. My daughter's been begging me for a dog for years, and I'm still saying no. She can't apply for this rule, actually. You know, she can't make a request. So at the moment, adverts can still say no pets. In the New World Order, you won't be able to put that in. It will be an applied term that they can request a pet, and there will be specific timeframes. So they must ask for permission in writing to keep a pet. And now you will not be able to unreasonably refuse it, but there will be reasons that you can give to refuse it, one of which specifically is if you live in a block of flats and those flats in the lease say that you can't have a pet. That is a perfectly good reason to refuse it, but you have to do it in writing and you have to do it within 28 days. Again, for those of you that are clients, we can deal with this for you, and we have all the templates ready to go. Haven't been sitting here twiddling my thumbs for the last 3 months. I've actually been doing some work for a change. So the landlord can ask for more info on the pet. We've got a pet profile that we'll be sending out to people when they request pets for them to complete. It's quite a long document, so that might put people off. Right, next one. Tenants can give notice at any point. Now, my understanding actually is that whilst the tenants can give notice at any point from the day of move-in, that notice has to expire in line with the rent dates. Again, it may be that this is something that changes as the law plays out, but the letter of the act at the moment is that it does have to end at the end of a rent period. So they'd have to give it on the day they move in or wait till the next month before they can place it. This is an interesting one, and that is that joint tenants will be able to give notice. That means one tenant, when giving notice, is giving notice for all of them. So if you have a house in multiple occupation, or let's say you've got a couple that are sharing and unfortunately the relationship breaks down and one of them gives notice, that notice actually applies to both of them. And you can, of course, enter into negotiations with the other tenant for them to stay whilst the other one leaves. But if you decide that you don't want to do that, they all have to leave at the end of the tenancy. And the question is then, what will you do if one of them doesn't go or several of them don't go if you've got sharers? And I heard on a webinar the other day, and I am not a lawyer, so this is not legal advice, but I heard that actually a clause or a ground that we don't use very much, which is a trespass ground, will become something that is more prevalently used when trying to get tenants out in this situation if one sharer stays when the rest go. So again, this is going to be something that we live and learn as the legislation plays out in real life. But just something I heard, which I thought was really interesting because nobody had talked about it before. Tenants must give a notice in writing, email, text, WhatsApp, all count as writing. Let's have a look. There will be amendments to the Protection from Eviction Act. And here we go. Notice to quits can be withdrawn with mutual agreement. So I think if someone does give notice and you then renegotiate with the other tenants to stay, that has to be confirmed in writing. This is the bit about the trespass notice. Where they stay past the notice, double the rent applies, and that is somehow linked to trespassing. Okay, so actually maybe could be lucrative. Right, discrimination. You cannot refuse a tenant just because they are in receipt of benefits. You can't refuse a tenant because they have children, so no longer can you put no children on an advert. Property adverts cannot state no DSS or no children. And mortgage or insurance terms prohibiting benefits or children will be void moving forward. Now, what this does not mean is that you have to accept any tenant. What it does mean is that you have the right to refuse a tenant if they do not meet the financial requirements that you have in place. So when we reference a tenant, they have to meet certain financial criteria. Their income has to be a certain level times the rent. And if they can't meet those criteria, then you don't have to rent to them. But of course, they are allowed to have a guarantor. And this is one of the areas where rent guarantee is going to become so important. So yes, you will have to accept a tenant if they meet the criteria, but you can make sure that you put in place rent guarantee and they have to meet the criteria to meet the rent guarantee, which is therefore protecting your income. Okay, I have had a few questions about this, people being concerned about their information being freely available in the public domain. So the property database, which is coming at the end of this year, but we don't have any set dates yet, will require landlord's details. So that's going to be name, address, property information. You will have to key in the dates of all your safety certificates, gas, electric, EPCs, and it will have to have details about whether you've been convicted of any offences, fines, penalties, any of those. Any of you who've had to apply for a selective licence, some of the questions they ask are going to be very similar to those. Yes, the database will be public, but there will be limited information available about you. I mean, it's not going to have your phone number and your date of birth available for the public to see. Because I did have a lady saying, do you think people are just going to call me directly? I don't think that's going to be freely available to the public. It will be available for the local authorities to see. But I don't think it will have your home address on there. It may be that you record it, but it won't be available for the public. It'll have lists of properties that are managed by local councils. We don't know what the fee is going to be to register for this database, but we think it's going to be something in the region of about £30 per year. There'll be secondary legislation that comes in that this information must be kept up to date. You will not be able to advertise your property on the market for rental if it's not on the database or the information is out of date. Now, actually, I'm quite a fan of this because it means that all your paperwork has to be in order before we even put your property on the market, which protects everybody, really. All adverts must include a unique database number. So I think we're moving more to this unique reference number they've talked about having for properties in the past, which in theory will make transactions quicker moving forward, but we'll see about that. £7,000 fine. Oh, I actually clicked off that too early, sorry. So yes, it's likely that any fines for initial breaches will be £7,000, but they can be up to £40,000 if you are a repeat offender. So don't get it wrong. And you cannot evict someone if you are not on the database. Right, and then we've also got the landlord redress. I can't speak now. Landlord redress scheme coming. Obviously, we've been members of the Property Ombudsman since the regulations came out, but now it's going to apply to landlords as well. So you'll have to be a member of the Ombudsman. Again, we don't know how much it's going to be, but I would imagine it's probably a similar figure, maybe paid yearly to what they're going to be charging for the database. Again, they're going to bring in some more secondary legislation and regulations to go with this, but you won't be able to market your property before you become a member. So important, I put it twice. And obviously there'll be a fee, and I guess there'll be the issue of rent repayment orders if you don't comply, which is quite scary because they are going to be able to go for 2 years worth of rent if you don't do what you're supposed to do. And you get caught, obviously. But Brent are pretty good at catching people, so be wary. Okay, decent home standard and Awab's law. I'm sure we all have heard the terrible tale of Awab Ishak and what happened to them as a result of the Rochdale Council not dealing with the severe mould and damp that they were experiencing in their properties. There's also the case that I know a lot of the time with condensation, we talk about it being a lifestyle issue, and you know, partly it is, but that is not going to be a reason to not do anything now. So as a landlord, you need to be able to be seen to be doing whatever you physically can as a landlord to improve things like ventilation and help tenants monitor condensation levels in the property. Again, we don't know the start date for this, but they've talked about bringing it in 2035. I would imagine that there are a lot of landlords out there that are much better at this than social housing. But as we know, it's the bad landlords out there that ruin it for everybody else. Okay, Lee touched on this earlier. I'm just going to go through this quickish about the new grounds for possession that are going to be available to you. If you are interested, we'll be sending out slides afterwards as well. So you don't need to remember all of this because it's quite a lot to take in. So obviously we've got ground one, which is where the landlords want to move back in. As Lee said, it's 4 months and it can't expire before the 12 months of the first tenancy is completed. And you won't be able to re-let for 12 months. Not available if you're a limited company. That means not if the tenant's a limited company, but if you, the landlord, are a limited company, because obviously the limited company is not going to be moving into the property. Ground 1A, if you want to sell, again, same criteria. It's a 4-month notice. Can't expire before 12 months from the start of the new tenancy. Can't relet for 12 months afterwards. Not available to historic assured tenants. So if you have tenants, we actually have a few who were assured tenants, you can't sell those properties. But I mean, you can't get rid of them now anyway. So that hasn't changed. Ground 4A, student HMO. As I said, I don't know a huge amount about this because we don't deal with it, but there is a notice that you're going to have to serve on them, and you will be able to get them out each year because obviously they run in the student term time frames, and you have to always keep letting it to students to be able to use the notice. There's a special criteria this year as they bring in the legislation. 4 months notice is reduced to 2 months because we're already within that time frame period of when those tenancies are going to be leaving, so you need to get that notice out soon. 6B, landlord has breached an order. So there'll be somebody else telling you that you've done something wrong and you need to get rid of the tenants because something else is going to happen to you. It might be an order from the local authority. Oh, there you go. Expert over there. 4 months notice to tenants, and you'll have to give them compensation because obviously it's your actions that have caused the need to bring them out. Ground 8, obviously, Lee covered that earlier. 3 months rent arrears, 4 weeks notice. Getting it wrong, as I said earlier, fines of £7,000 to £40,000. You're going to be at the 40,000 end if you're continuously breaching, and obviously with a numerous continuous breaches, you are likely to face criminal prosecution. I keep seeing these posters out there, don't mess with Brent. Very, very ominous. Rent repayment orders, obviously a lot of this cash is going straight back to the local authority, so they are incentivized because they're not making any money at the moment, so they need our cash, a bit like charities. Right, and we're going to have ban on letting or marketing if you're doing it wrong. So let's do it right. Oh, and the last bit, if you do get it wrong, you will be prohibited from using the eviction process until you've put it right. Okay, any questions? I've stunned you all into silence. Fallen asleep? Oh, sorry about that. It wasn't engaging enough. I'll do better next time.
18 grounds from section 8. You're not going to need a lot of them, but just any of you want to know the 18 grounds are, feel free to drop me or Abigail an email. We can send them over. For example, tenant dies, there's death of a tenant, there is if
happens.
It happens. The one you mentioned was enforcement actions. So the
yes.
Is obviously getting enforced by the local authority. I'm looking at some here. If you need to redevelop, I've used this one myself, just so you're aware. If you need to...
Actually, that one's pretty going to become quite popular, I would think.
A popular one. So if you need to refurb and redevelop and it can't be done in situ, you can serve a notice for that. It's another 4-month job, but it's quite easy ground. So just, there's other grounds if you want to...
We've used that for a client, actually.
Abigail, if you've got tenant in and you have trouble with tenant going forward, can you guarantee the rent for that year so that will cover you?
You can apply for a rent guarantee policy for an in situ tenant as long as they have a good history of paying the rent.
So you've got a new tenant goes in, can you start the rent year?
You can.
That
will cover you. Yeah, I mean, obviously, different rent guarantee policies have different criteria, but they will normally cover you for at least 12 months worth of rent, maybe more moving forward because they're currently reassessing the future landscape. They'll cover you for legal fees as well to evict tenants, take some of the stress out of it because whilst evicting someone's stressful, not getting your rent for 24 months is much worse. Anyone else? Tony?
You mentioned prohibited clauses.
Yes.
I thought for existing tenants, all we need to do is serve the 4-page information sheet. If the existing tenancy agreement has what will become a prohibited clause in it,
I think my understanding is that you'll be all right because obviously you're not going to be using them. It just means you cannot put those prohibited clauses in new tenancies from the 1st of May. And do not rely on them to enforce anything on a tenant after that. Anyone else?
So if your tenant move out after 2 months, will you charge the landlord another fee to get a new tenant?
Millions of pounds. No, what we will be doing, we'll those of you that are clients will speak to you individually about this, but we will obviously run a scheme, but we'll change our fee structure so that you'd pay your initial fee and then obviously you'd get a credit back and perhaps a much smaller fee for a second letting. We've got to work together, right? Otherwise it won't work. Anyone else?
So with the existing contracts being void,
Mm-hmm.
are you guys going to be drawing out new contracts?
So you can't serve new contracts on existing tenancies. They're going to get this document, which is the information sheet, which basically just outlines the changes that are going to come and what their tenancy will be based on moving forward. Any new tenancies either have to be served with this document the government's created called the Written Statement of Terms, or you incorporate that into your new tenancy agreement for new tenants from the 1st of May. So the agreements that we're going to be using will have the Written Statement of Terms incorporated into the tenancy agreement, but it has to be clearly marked so you can prove that you've served the Written Statement of Terms on the tenants before the tenancy starts.
Second question was the rent guarantee. Tenants can leave with the, as long as they give the notice period.
So, the rent guarantee won't protect you in the event that a tenant leaves. It will only protect you whilst the tenant is in situ and either not paying rent or they've breached something and you want to get rid of them using one of the other Section 8 grounds, and it will cover the legal costs for doing that.
I see. So they're left with, say they're for 4 months, there's another 8 months. They don't cover it for the 8 months, it's covered for 4 months.
Exactly right, because the tenant's obviously allowed to leave. And under the wording of the rent guarantee policies, once vacant possession has been granted, that job's been done effectively. So they don't guarantee the rent. It's not guaranteed rent, it's rent guarantee. So whilst the tenant's in occupation, it guarantees that it will pay the rent should the tenant default.
And what about this letter we have to give? We have to hand it to the individual tenant.
My recommendation is don't hand it to them, because that doesn't give you a very good audit trail. You're talking about the information sheet that I mentioned. I'll sort it out for you.
Okay.
Don't worry, we'll speak about it. We'll do it for you. Any other questions? I knew it was going to be you.
Well, then, obviously, information sheet, I got curious.
Yes.
I looked at what I thought might be a model
Mhm.
of the new tenancy.
Mhm.
And I thought there might be some traps in there, forcing us, requiring us to do things that we haven't
Needed to do before.
So fire risk assessments, for example, for a self-contained property, we don't need to do now. I think it might become a capital obligation under the new.
So we have a piece of software that we use, because when you're doing the fire risk assessment inside a small self-contained unit, it's more common sense than anything else. And we have a set form that we can do. On a bigger scale, when you're looking at a bigger building, then obviously it's better to get in fire risk assessment experts for that. But yeah, internally in a small building, particularly if it's a flat on one floor, we've got a compliant document for that.
Does that cover HMOs as well?
No, that for HMOs, you are going to need to get experts in there, and I can recommend someone. It's not me. I'm good, but I'm not that good. Anything else? Anyone else? Don't be shy. No stupid questions? No? Okay, well, thank you all for coming. This was the first time we've done anything like this, and actually my worry was we were going to run over, so we've done all right with the time. There was a lot to cover. I couldn't go in too much detail, but hopefully it was deep enough that you guys have all got a good idea of what the Act has got to bring. But I think the last thing is, I know a lot of this has been quite depressing. You've weathered plenty of years in this industry. I don't think this has got anything that is going to throw up too many problems for most of you, because you all like to do things properly. So for those of us that are law-abiding and doing things the right way, We'll be okay, but we'll get through it together. Okay? Thank you very much, everyone. Okay. You can all go home.